Everyone wants to turn a quick buck. The stock market, with its promise of high returns, is alluring. But it's also a risky game, especially in today's world. That's where AI comes in. Many believe AI can predict the market. Can it really? I decided to find out. For 30 days I put $1,000 on the line. My goal? To see if AI could really deliver those sweet, sweet gains. This isn't just about making money, it's about understanding the forces shaping the market, and how AI might change the game forever. So, buckle up. We're diving headfirst into the world of high finance and cutting-edge technology. The year is 2024. The global economy is a bit wobbly. Inflation is like that annoying houseguest who won't leave. Interest rates are going up. And don't even get me started on the geopolitical tensions. This isn't exactly a walk in the park for investors. Companies are feeling the heat, profits are under pressure, and the stock market is reacting accordingly. Volatility is the name of the game, but amidst this uncertainty, there's a glimmer of hope. Some experts believe that the second half of 2024 could bring some relief. They're predicting easing inflation and a potential slowdown in interest rate hikes. It's a gamble, but could this be the light at the end of the tunnel? AI is everywhere these days. From the moment we wake up to the time we go to bed, AI is integrated into our daily lives in ways we might not even realize. From self-driving cars that navigate our streets to personalized ads that seem to know exactly what we want, AI is changing the world as we know it. It's in our smartphones, our homes, and even in our workplaces. But can it really predict the stock market? This is the million-dollar question that has everyone from Wall Street traders to tech enthusiasts buzzing with curiosity. Here's the thing about AI, it's like a super-powered brain that can process massive amounts of data at lightning speed. It can analyze complex data sets, identify patterns, and make predictions based on historical data. It can spot patterns and trends that humans might miss, giving it the potential to make more informed decisions. This capability has led many to believe that AI could revolutionize stock market trading. In theory, this gives it an edge in the stock market. By analyzing past market behaviors and current economic indicators, AI can make educated guesses about future market movements. But AI isn't a magic crystal ball. It can't predict the future with 100% accuracy. There are too many variables and unforeseen events that can impact the market. The market is influenced by too many unpredictable factors, like natural disasters, political upheavals, or even a random tweet from Elon Musk. These events can cause sudden and dramatic shifts that no algorithm can foresee. So, while AI can be a powerful tool for investors, it's not a substitute for good old-fashioned human judgment. Experienced traders know that intuition, experience, and a deep understanding of market psychology are irreplaceable. It's all about finding the right balance between man and machine. By combining the analytical power of AI with human insight and expertise, investors can make more informed and strategic decisions. In the end, it's this synergy that holds the true potential for outsmarting Wall Street. All right, let's get down to business. For my 30-day experiment, I decided to invest in a stock that AI predicted would go up. I chose a well-known AI-powered trading platform, and I fed it a bunch of data, historical stock prices, economic indicators, even social media sentiment. The AI crunched the numbers and spat out its prediction, XYZ Stock, a solid company with a history of growth. According to the AI, XYZ was poised for a breakout. Now, I'm not a gambler, I'm a cautious investor. So I went in with measured expectations. I knew there were no guarantees in the stock market, but I was curious to see if the AI was onto something. Could it really beat the market? Section 5, Week 1, a promising start fueled by tech optimism. The first week of my experiment started with a bang. The excitement in the air was palpable as the stock market opened, and I could feel the energy surging through my veins. It was a thrilling moment, one that I had been eagerly anticipating. XYZ stock surged ahead, riding a wave of optimism in the tech sector. Analysts were buzzing with positive predictions, and the charts reflected a promising upward trend. It seemed like the perfect storm of favorable conditions. My $1,000 investment was already showing a tidy profit. The green gains on my portfolio were a sight to behold, and I couldn't help but smile as I checked my stock app. It felt like I was on the right track. Was this the power of AI at work? The algorithms and data-driven decisions seemed to be paying off. I had always been curious about the potential of artificial intelligence in trading, and now I was witnessing it firsthand. It's too early to say for sure. While the initial results were promising, I knew that the stock market could be unpredictable. It was important to stay grounded and not get carried away by early successes. The market is a fickle beast. One moment it can be soaring and the next it can come crashing down. The volatility is part of the game, and it's something every investor has to contend with, but I have to admit, I was feeling pretty good about myself. The early gains had boosted my confidence and I felt a sense of accomplishment. It was a small victory, but it meant a lot to me. Maybe this AI thing wasn't just hype after all. The data-driven approach seemed to be working and I was starting to believe in its potential. It was an exciting prospect, one that could revolutionize the way we approach investing. Of course, I didn't let the early success go to my head. I knew that staying disciplined and focused was crucial. The stock market could be unforgiving and it was important to remain vigilant. I knew things could change quickly in the stock market. The news and trends could shift in an instant, and it was essential to stay informed and adaptable. Complacency was not an option, and I was prepared for a bumpy ride. The journey ahead was uncertain, but I was ready to face the challenges head-on. The ups and downs were part of the experience, and I was determined to learn and grow from them. But for now, I was enjoying the view from the green side of the ledger. The early success was a welcome boost, and it gave me the motivation to keep pushing forward. The journey had just begun, and I was excited to see where it would lead. Section 6, Week 2, Inflation fears cast a shadow on the market. As Week 2 rolled around, the market's mood took a turn for the worse. Inflation fears, which had been simmering in the background, boiled over. The Federal Reserve hinted at further interest rate hikes, and investors started hitting the panic button. XYZ Stock, which had been riding high, got caught in the downdraft. My initial gains began to evaporate. The AI, it seemed, hadn't anticipated this sudden shift in sentiment. This is a perfect example of why relying solely on AI can be dangerous. It can't always account for unexpected events or emotional reactions in the market. Section 7, Week 3, Geopolitical tensions spark a market sell-off. Just when I thought things couldn't get any worse, they did. Geopolitical tensions, which had been brewing for weeks, finally erupted. A major international conflict sent shockwaves through the global economy, and the stock market went into freefall. XYZ Stock, along with the rest of the market, took a nosedive. My $1,000 investment was now deep in the red. The AI's prediction seemed like a distant memory. This is a stark reminder that the stock market is interconnected with the world around us. Political instability, natural disasters, or even a global pandemic can throw a wrench into the best-laid plans. Section 8, Week 4, a nail-biting finish as the clock runs out. The final week of my experiment was a nail-biter. The market remained volatile, swinging wildly between hope and fear. XYZ Stock, mirroring the broader market's uncertainty, bounced around like a ping-pong ball. Each day brought fresh drama. Positive economic data would spark a rally, only to be followed by another geopolitical tremor that sent stocks tumbling again. It was a roller coaster ride I wouldn't wish on my worst enemy. As the clock ticked down to the final bell, I had no idea whether I'd end up in the black or the red. The AI, which had seemed so promising at the start, had proven to be as fallible as any human analyst. Section 9, Conclusion, Lessons Learned, and the Future of AI in Investing. This section is a reflection on the journey we've taken over the past month, exploring the intersection of artificial intelligence and the stock market. So after 30 days of market madness, where did my $1,000 investment end up? The journey was filled with ups and downs, moments of excitement, and times of uncertainty. Well, I'm not going to spoil the surprise. The final outcome is something you'll have to see for yourself. It's a testament to the unpredictable nature of the market and the role AI can play in navigating it. You'll have to watch the video to find out the final result. But beyond the numbers, this experiment was about understanding the broader implications of AI in investing. But more important than the final numbers are the lessons learned. This journey has provided invaluable insights into the strengths and limitations of AI in the financial world. This experiment was a crash course in the realities of the stock market. It taught me that the market is unpredictable. No matter how much data we have or how advanced our algorithms are, the market can always surprise us. No matter how sophisticated the technology, predicting the stock market with 100% accuracy is impossible. There are too many variables, too many unknowns. AI can be a valuable tool, It can process vast amounts of data quickly, identify patterns that might be invisible to the human eye, and provide insights that can inform our decisions. While not a crystal ball, AI can help investors analyze data, identify trends, and make more informed decisions. It can be a powerful ally in the quest for financial success. Human judgment is still essential. AI can provide data and insights, but it can't replace the intuition and experience that human investors bring to the table. Investors need to balance AI insights with their own experience, intuition, and risk tolerance. It's about finding the right mix of technology and human judgment. The future of investing will undoubtedly be shaped by AI. As technology continues to evolve, its role in the financial markets will only grow. But it's crucial to remember that technology is just one piece of the puzzle. Successful investing requires a holistic approach that combines technology, human insight, and a deep understanding of the market. Success in the stock market still requires a healthy dose of caution, common sense, and maybe even a little bit of luck. The journey of investing is as much about learning and adapting as it is about making money. Continuous education and staying informed are key. The market is always changing, and so should our strategies. Embrace the tools at your disposal, but never stop learning and growing as an investor. The future is bright for those who are willing to adapt and evolve. AI is here to stay, and its potential in the world of investing is immense. But remember, the best investors are those who combine the power of technology with their own unique insights and experiences. So, as we look to the future, let's embrace the possibilities that AI offers, while staying grounded in the timeless principles of investing. Here's to a future of informed, intelligent, and successful investing.